Let's close out today, guys. Single-family construction slows across the country in Q2. Now, we had talked previously about how home builders really have all the cards in their hand. They can decide how much inventory they bring, how much they don't, based on how many months of supply of homes there are, what kind of the appetite for buying is. They're right now filling a gap of inventory because we don't have enough of resale homes or existing homes on the market. So they're bringing a lot of inventory to that. But now we see that single-family construction is slowing. So it doesn't mean it's going negative. They're not tearing homes down. Let's be clear. The National Association of Home Builders, the NAHB, is saying that single-family home building slowed across the country during the second quarter of 2023, which honestly, I was a little bit surprised because to me, you look at permits, you look at housing starts, yes, cost of labor, yes, cost of goods is up, but we don't have inventory backlogs like we did before, and we still have demand.
So do you think they know something we don't if they're slowing the brakes down when everything else is, signaling out another thing? And it goes back to the conversation we said earlier. When builders want to move product, all they have to do is flash a little bit of here and there, and look, $35,000 appear to make it happen.
Yeah, I think it is a little bit
out of nowhere.
I know what I mean.
I think it
out of their margins.
I think it is. I think it's a couple things happening at once. Number one, they clearly are telling us that they have an issue finding labor that's consistent, that will stay and can get jobs done on time. That's a problem. We locally have seen construction delays. Yes or no?
Yeah, 100%.
Yes,
I mean, 100%.
There is a there's a legitimacy to the cost of the goods or raw materials to construct right now, and they now are facing a legitimate commercial lending issue. The commercial lending part of this, I think, is part of it. So they may be slowing. You could say that maybe they're nefariously slowing the rate of new homes because they're trying to keep the prices high. But legitimately, if you go talk to a builder right now, I don't know what they'd tell you about their commercial lending options. They may not be there.
I mean, you see a lot of people, big corporations shutting down high, like San Francisco, for example. They pulled out a lot of operations for all the companies that they had people working in those offices. No need for anymore when you can work remote. So I think that's also something that's, how do I say it, very unspoken about, that we're still going to see a lot of repercussion. And even though it's commercial, think about it. People work for certain companies that have commercial assets. So a lot of that is going to be a trickle effect. And when one domino falls, you will see that it starts hitting every other industry that's tied and connected to it.
Yep. One of the things that I wanted to read here from this is from Robert Dietz, the NAHB's chief economist, said that the latest HBGI data continue to show a changing geography for home construction. Multifamily and single-family construction have shifted to lower density markets with market share gains for those types of markets. This is especially true for apartment construction, which has seen a segment share decline for large metro areas as development shifts to the suburbs and exurbs, which, again, these lower density markets, I think, is where you're going to see more development because people are trying to get out of metros, trying to get out of high cost areas, and where people are having to carve back their personal finances, they're going to go to look, where can I afford? And for those who are now going to deal with the college repayment of student loans, this is going to be even more important. So I think there's maybe a semi-slow walk that's going to help construction in the long term because of some of these new factors.
So something else that I did see here that goes along with what you said is rural areas. So right here it says, despite the decline over the past 4 years, rural markets have shown resilience as the single-family home building market share has risen from 9.4% at the end of 2019 to 12% early in 2023. And you know what? It makes perfect sense. I do have clients that are opting to go out of the suburbs, out of the city, because of the fact that they could get more bang for the buck. They can actually get a house, not a condo, and they'll be within a payment that makes sense for them. Now, will they have to make a commute? Yes, but that goes to the point that we're making. Everything right now comes with a sacrifice. So what are you willing to sacrifice to get what you want?
Well, actually, let me ask you guys this. If you were a builder here in San Diego, it's definitely not low density. There's still a lot of demand here. Wouldn't you want to build here, though?
Yes and no. It depends, right? Your cost to build, whether you can get building. There's a lot of permitting and licensing stuff here in San Diego alone. But my general answer to your question would be, I would go build where the puck is going next. That is what I think is going to be most long-term longevity. Like, even in the area we're sitting in right now, this land was held, and the land around us was held for decades before it started getting built. Not too far that direction was all rolling hills with cows and grassland and livestock. So Telegraph Canyon ended, Otay Licks Road ended, and it was just green grass and cows. That was all owned for a long time, and then it became developed land only in the last 20, 30 years. So I would go where the puck is going to be next, because you have to look for space, you have to look for density issues, you have to look for opportunity opportunities? Where can people afford? And you play that game, and then you start putting a shovel in the ground.
I feel, and I'm just spitballing here, I feel based off everything that we're seeing with the commercial space, I think there's a huge area of opportunity for the buildings that are going to be vacated or let go completely to be able to reuse that land or that property for a certain, housing type of like deal, whether you're able to do mix of commercial and housing. But I feel that there is going to be lots of vacant areas that are commercial that could be rezoned to be residential properties or a mix of both.
Yeah, and they might just be, you're going to start seeing that, and we had previously discussed that there will be municipality participation in development if there's not enough housing solutions, because people just end up in situations that the city or the county or the local municipality does not want happening.
Yeah.
Either people living in cars, staying on the street, RVs lining the sidewalks, that kind of thing, and they're not going to want that either. So there will have to be some sort of solution, but that's, I would be looking at what gives me the most value for my time and money commitment, and what also helps solve the problem. Because if you can solve the problem once and you can solve it twice, you can solve it a third time.
Yeah, and I might be jumping ahead here, guys, but what do you think of that quote? Single family production should register growth in the months ahead as the Federal Reserve nears the end of its tightening cycle and mortgage rates begin to stabilize. Because I actually wrote down, I disagree.
Tell me. No, go for it.
Yeah.
Well, I mean, I disagree just because, because of everything we talked about, especially last week, all the signs are pointing towards rates possibly going to 8%. And of course, I don't want to say they are going to 8%, but everything's pointing towards that. So, I mean, let's see, this was written on September 5th. Okay, never mind. I was going to say maybe he was a little late, but this was written on September 5th, 2023.
Yeah, but it's okay. And the thing that stood out for me, though, is stabilize. He's not saying tightening cycle and mortgage rates begin to decline.
100%. That's what I noticed.
Stabilize. I'm like, okay, you could have chosen the word decline there, but you didn't.
So when I think about stabilize, right, I think of it going like this, and then just going like this. But think about it. Where are we at in the ranges of it stabilizing down? Where is it going to stabilize to? Like 7%, 8%, 6%? And that's ultimately also something that we have to pay close attention to. But I feel it's not going to go. It's not going to go down for sure in the next coming 6 months. I am going to just say that, and we'll see in 6 months.
Yeah, I think and they kind of bring up. They don't bring the point up, but they're kind of proving the point when they're looking at the multifamily sector reporting positive annual growth rates in just 3 markets. And then large metro core counties reporting the lowest multifamily production growth rate with a yearly drop of 10%. This all says scarcity. So scarcity is going to be part of the factor and the variable that keeps prices where they are. Scarcity of money is what keeps mortgage rates high. When there's more money that comes into the system, rates go down. We got to lend that money out. And we're not even talking about, guys, by the way, I know we talked about the student loan thing coming up, but we didn't talk about credit card defaults that are increasing. We didn't talk yet about car payment defaults that are increasing. So the consumer is going to continue facing pressure. And I think that having to stabilize rates is a shot across the bow signal that they're expecting we're going to be in this window for a while. Just like we talked about, this is not an easy solution. It's not making you turn in 2 or 3 months. This is going to be the story of 2023 going into 2024.
Yeah.